Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
It was nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday. Looks like we just got a transmission from Julie at HQ. Huge sales store-wide happening all month long.
Okay, great. Can you put that away now? It's distracting me from my driving.
One of these days, we need to install autopilot because I seriously think we're lost.
Didn't we get lost last year?
We did, I thought we would remember how to get there this time.
Let's just keep traveling to different galaxies till we recognize it.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys, and welcome back to another live stream. Happy to be here on a Friday with you. I don't know about you guys, but I'm ready for the weekend. Traders, of course, like when the markets are active, but and I do too. But my goodness, I'm ready for them to take a break. It's been such a busy, crazy week. Everything is, made some substantial moves, some things up, some things down. Taking a look at the market action here today, the S&P 500 is about flat. NASDAQ is slightly lower. The Dow Jones is flat. You got the Russell slightly lower here this morning. Dollar index is up 0.3%. The Nikkei is down a little bit here this morning. The VIX is lower, down by 2%. Chinese stocks gave back all of their gains from yesterday, down 5.3% here this morning. To be honest, I don't really know why. Maybe somebody has more details on that. I didn't really even get to that on the Chinese stock side of things yesterday. You had a big pop yesterday. I'm going to guess that there was some sort of stimulus thing that's been the catalyst here recently. But again, with the kind of recent developments, we all are familiar. Well, many of us might be familiar if you've been trading for a few years about the trade war that occurred during the last Trump administration, which has the potential to really, really hurt China. So that to me makes Chinese stocks a little bit cautious. As if they were not already cautious. I probably won't be rushing to buy Chinese stocks currently, because again, I don't really know what that, are we going to see a ramp up into, a trade war again? It seems like a possibility. At the same time, you've got gold here, slightly lower. Yesterday, it had a nice bounce. from some support levels around 2670 or so. Silver bouncing back up, coming back up here. Copper's down 2%, probably trading alongside the Chinese stock market, as it has been here recently. Big pop. Big reason for that is that commodities, especially like industrial commodities like iron ore and copper and oil and things like that, that are just, highly required in a strong economy or global economy. Those things are typically going to rise and fall with China, since it's such a manufacturing hub for the world, second biggest, economy of the world. So if the Chinese stock market starts bouncing on, the economy potentially coming back, yeah, a lot of those commodities would potentially rally. But again, I'm kind of mixed on commodities at this moment. Oil down 1.3 here this morning. We'll see. I'm with you on the weekend anticipation vibes. Yeah, Lee, I'm ready for it, man. I'm I'm looking forward to just. Well, I mentioned that my wife and I are closing on a house pretty soon, and so yesterday we did a big trip to Home Depot, buying a bunch of cleaning supplies, just getting ready for the the pile of work that comes with moving in a new home. So it's an exciting time, and I mentioned yesterday, if I can brag for a moment, my trading performance the last few years has been quite good, and I'm actually taking a good chunk of the gains that I've made, and my wife and I are using that as a down payment, which to me, young trader Nick would look at that and a tear would roll down his eyes. So, very thankful for what I get to do here each day, and trading has substantially helped in my life in that. But it is no path to riches easily. I mean, you guys got to think, if I've been doing this since 2017, like obsessively since 2017. Like I invest all my time. To pat myself on the back, I work 7 days a week. I love this stuff, right? There's no stopping for me on this stuff when it comes to trading, when it comes to what I do. So, just know that with hard work comes, hopefully someday a payoff. And my wife and I are very thrilled. And, it's one of those things, very cool that trading can do those sorts of things for you. And even if that means, along the way in trading, there's been cool milestones like that. At one point, like I was happy if I could pay my phone bill from trading. At one point, it was like a portion of my rent came from, trading. And then I was able to pay for a vehicle, like I bought a car. So it's cool. It's progress. And wherever you are at in your journey, I would just encourage you, don't look ahead. Like I can't go buy a yacht for my trading, but I can help with the down payment on my house, which is really cool. Everybody's on their own journey. Everyone's on their own step. Don't compare yourself, because again, part of me is like, man, I wish I could buy a jet with my trading, but I can't do that. Right. But there's like stepping stones, and wherever you are, just embrace the journey. Anyways, there's enough philosophy for your Friday. Let's see what else is moving here this morning. We don't really have any economic data, to my knowledge, that is like major this morning. We do have consumer sentiment, preliminary University of Michigan consumer sentiment numbers coming out, inflation expectations for U of M as well. Employment data came out for Canada here. Unemployment rate went down slightly. Employment change, number of jobs added in Canada were a little bit light. Did that cause any interaction with gold here? 830, not too much. Speaking of gold, gold is just gold is a tricky one for me. Off of the follow-up period from the election, right? The down move in gold makes a lot of sense to me. However, as time settles, right? As now, okay, we've got Donald Trump. Whether you like him, dislike him, at least the uncertainty is behind us. And I think that that is what prompted a gold push lower, as it did, by the way, with Biden last time around and with Trump the time before that. Gold sold off on the news because people's fears were there were worse things that could happen. I guess that is subjective. Maybe you really didn't want Donald Trump to win, but regardless, what I mean by that is from a security standpoint for the stock market, for the investors of the world in the short run, what would have been more scary would have been if there was a very close tie or something, and investors were scared as people, maybe there wasn't going to be a peaceful resolution. Maybe there was going to be a repeat of what we saw last time, which really scared people. The threat to democracy could cause gold to spike up, but we didn't see any of that, right? We saw a decisive winner. So with the decisive winner, that again, some of that fear comes out of the price of gold. That's what I've been trying to explain several times. You basically see a little bit of that coming out of gold, but then the question is, does now gold start to continue higher? And some of the things that I'll be looking out for, mapped out on the Edge Finder, pretty much sums it up. I'll do this. Data screeners. Let's go to gold and silver. So here's what I'm looking at, right? If we see some of the economic data materially weaken, then I might be more bullish on gold. But right now, I'm just actually very neutral, because yes, you have uncertainties of who the president's going to be, but with Trump, what happens globally, we'll see. There's also the question of just the economic data itself, right? From here, in the coming weeks, in the coming months, does the economic data in the U.S. weaken, or does it hold steady? If it weakens, I think gold still looks very attractive. But if it doesn't, again, I'm not interested in buying gold. Currently, I'm just neutral. I don't know. What I'm waiting for is, again, some of these data points that are coming out. In fact, let's break down what we've got coming. We've got CPI coming. And if CPI comes in much lower, then that could give the Fed more excuse to cut rates. That would be bullish for gold, right? At the same time, PMI data, keep an eye on that. We did get some fresh PMI data recently. One was weaker than expected. One was stronger than expected. So that's kind of a mix, right? So what I'm looking for, without getting too boring in the economic data, which I know is not the most exciting thing for people. It is for me, and for maybe some of you guys, you like the economic data. But basically what I'm looking for is weakness in the economy to get bullish on gold. And if there's strength in the economy, right, then no interest in buying gold. In fact, maybe even getting short gold if we see enough things start to flip bearish. One thing that keeps me at bay with getting too bearish on gold too is the commitment of traders data still shows that institutional money is still very bullish on gold, right? They still have huge positioning on the long side of gold, right? Long to short ratio is 80% long. Now, this is not a short-term signal, because again, this has actually they've been bullish and long on gold for like the whole year. So this is not like a short-term, like, oh, it's bullish from these levels. It's a long-term indicator. I like to look at the second table here as more of a short-term indicator, or a shorter term. We can see they actually sold some gold recently, right? They reduced long contracts and they increased short contracts. We'll actually get fresh data on this, by the way, guys, later today. The commitment of traders data comes out every Friday, and our software will automatically fetch that data and populate this sheet for you so that you can watch it close and see essentially what, big money is doing. What are they buying? What are they selling? So yeah, we'll see. By the way, the Edge Finder is currently on super sale for our Black Friday event. We're currently doing 40% off. If you'd like to get access to the Edge Finder for that 40% off discount, we'll drop a link here in the chat where you can speak directly to a member of our support team. You can speak with a real staff member on our live chat on our website. You can go to a1trading.com, use the live chat feature there, or we've got the link here for you in the chat. You can click this link that's been dropped here, send us a direct message, Ask them about the 40% off sale for Black Friday. They'll get you that discount. They'll give you any information you need about the tool. If you want to see the Edgefinder free course that we offer, you can also dive through that to see if it's the right tool for you. It's a great way to explore the tool for free. If that is something that you're interested in, send us a DM and we'll get you some information on that. Again, click the link that's in the chat right now. And if you're watching back at a later time, you can either click the link in the description or you can go to your browser and go to a1trading.com and click the live chat button in the bottom right. Can you pay it monthly? Yes, send us a message. We'll work that out for you. We do offer monthly installments if that is something that you need. And we can, again, someone from our support team would be happy to assist you with that. Stock market just opened up a few minutes ago. And I've been saying this, guys, for the last few days. I am like really doing my absolute best to do absolutely nothing at all. And to clarify what I mean by that is I have several positions on the long side that are currently working very well. And it is very difficult. I explained this with, if you were watching the live stream yesterday with Chris and I, we discussed this at length, but I mentioned that one of the hardest times for me as a trader, I trade a lot of indices and I trade predominantly on the bullish side when we're in bull markets like this. But this is hard to do. What I mean by that is it's hard for me not to want to do something. Like, I'm trying to think of the best way I could possibly explain this. I have trades that are working out really well, and I'm trying not to get in my own way by doing anything at all. All I'm doing on my positions that are working right now is watching for creative places to trail stops, right? I know that for the NASDAQ, most likely, we should continue higher in my view. And if I'm wrong, I've got a stop loss trailed. I'll show you my position on QQQ, right? There is the trade. The trade is live. I have a stop loss trailed. And my job today is to shut up and wait. But I will never shut up. I'm a talkative dude. But what I mean by that is I just need to do nothing at all. And that's actually hard. It's one of the hardest things because as traders, we feel like we need to do something. We feel like we need to be making plays, making actions. But with my style of trading, holding on to winners is very difficult. But I know it's what I'm supposed to do. It's what I've done for years. And it's what has led me to, the performance that I've had over the last few years, which is not, by the way, I don't want to say like, oh, my performance as if I am the greatest trader on earth. No, I've just done well over the years. I've beaten the S&P 500 by a margin of about 25%, not 25% in gains, but 25% more than the S&P 500 has returned over the years that I've traded, which to me is perfectly fine. To others, they may say that stinks. For me, this is good enough. I'm doing what I need to do in order to continue to hopefully have the same sort of performance. Right? But it's very difficult when you have winning trades. And I don't know, do you guys feel the same way? I want to ask a question to the audience. If you guys could just leave it in the chat for me. Let me ask you this. Do you find it harder to hold on to winning trades or losing trades? Type it in the chat. I'm just curious. Is it easier for you to hold on to, are you like me, where winning trades are harder than losing trades? Obviously, I'm not saying I would rather be in winning trades. That's not what I'm saying. I'm saying this is harder for me because when I'm in winning trades, I want to do something. I want to lock it in. I want to take partials. I want to close the trade. I want to realize the gains. And I want to, right? That's the human psychology part. And that took me a long time to get over in my trading. That took a long time to get over because for a long time, what I would do is every time I would see profit, I'd close the trades. Close, right? And that is, I think, what is probably natural. I'm going to take a guess here. That's probably what is natural to a lot of us. I'm seeing a lot of you guys' messages, by the way, saying that you feel the same way. And that's that's good to know that that we're kind of on the same page. Like we struggle. I think a lot of us probably struggle with the same things, right? When you're in winning trades, sometimes the best thing to do is to do nothing at all. And that's the hardest thing to do. Because again, I'm here looking at it. And I keep saying to Frank, who is in the office with me, I'm trying not to, when I get off the stream, I'm doing my best. I mean, I do the stream here. That's part of my daily routine. But when the stream ends, I'm trying not to look at this stuff. I'm trying to just keep my eyes off it, because if I look at it, I'm more likely to make a mistake, right? The best thing I can do is trail stops on winning positions. And, that goes for people who are feeling FOMO right now too. Some of you guys are not in positions. Maybe you're seeing everything going crazy and you're like, I'm not in trades. What do I do? Well, I'll tell you what I do in those scenarios. If I'm not in trades and I see everything moving, same thing. Walk away, check back in. If there's something setting up, great. If there's not, keep my eyes off it. It's really a important note that I've learned over the years is if you can keep yourself from looking at it, I'm less likely to make mistakes. In all actuality, there's only very finite small windows where I actually need to do anything in my trading. When the setup is there, take the setup. When you're in, for me, trailing stop mode, trail stops and stop looking at it and just check back in. If you're not in positions at all, check back in. And if there's setups, then great. If there's not, move on. It's really important because I think over trading does not necessarily just mean taking tons of positions. Over trading is sometimes over managing a position that you're in that you should really do nothing at all. Yeah. So that's something that psychologically is one of the hardest things in trading. It's weird how that works. But anyways, it's Friday, so I'm kind of more in trading psychology mode than taking a bunch of trades simply because I'm in some stuff. In terms of setups, however, let's just check in, see what else we've got. I do like Euro Yen. That is one trade that I may be interested in taking. Let's see how this is going. I have this marked up. If we get a little squeeze lower on Euro Yen, I might pick up a trade here. It's got a good reading on the Edge Finder. And I'm also happy to see that with my bullishness, there is nice bullish confirmations on NAS and S&P currently. Euro Yen is on the watch list for me as a bullish reading. Let's see what's on the bearish radar. Only CAD Swiss. Not a pair that I trade very often, but we could look at it. Yeah, I don't love that chart. Bitcoin, I've got my stop trailed on this one. And again, this is what I mean by doing nothing is all I'm supposed to do today. Is Bitcoin is running. If it keeps going, great. I trail my stop. I find a way to trail stops. And if it reverses, then I just take a small win and I move on. Can we take a look at the DAX? Yeah. DAX looks like it's maybe coming down. Is DAX on the top setups right now? It's neutral right now. So no interest on DAX just here. If it comes down to this area, you might get a DAX setup on the Edge Finder, then maybe. If NQ went bearish, would you close your trade? If the NASDAQ sold off and broke underneath support, I mean, this is where I would take my trade off, would be if it reversed, broke structure, and my stop got hit. So that's all I have for NASDAQ. I if it pulls back into this area, I already have a full size position for my own trading. For my own criteria, if I wasn't fully in on NASDAQ at this moment, I would look to add here. And again, let me clarify to the audience that I'm not telling you should add or you should build a position. In fact, as always with this stuff, None of this is financial advice. And I'm here sharing my opinions. Sometimes I'm wrong. Sometimes I'm right. If you get value out of these streams, I'm very happy to hear that. But my number one priority, if I'm being completely honest, is not to educate other people. It's to trade. And I share content about it. And I'm very glad that some people find a lot of value in the content I put out. But for me, it's trading first, education second. And it always has been. I don't say that as if I don't care to educate others, but I think it's dishonest to say like, oh, I'm just here to help the people. Like, no, I'm here to trade. And if you learn something and you like something that I do, then amazing. I'm glad to hear that. Silver trading at 31.57. A lot of the metals here for me are just very much caught up in neutral territory. Same thing with oil. So oil, gold, silver, all neutral readings currently. Nick, do you think London breakout strategy still works? The London breakout strategy is a classic idea, but it depends what you mean by that. This concept of during the London session, huge moves can happen is very true, but no like purely mechanical system works 100% of the time, obviously, right? Like, so I think that if you're trading during London session, yes, there's some huge breakouts that you could potentially look out for, but I still go back to what I always look for, which is fundamentals first for direction, and then technicals for actual execution. I don't really trade anything that is purely technical. I found that to be a really difficult way to trade, to be honest. I know some people may have found profitability being squarely and solely and only technical in their approach. But for me personally, I found profitability not by being solely technical. In fact, I break this down pretty frequently, but technicals play like probably 10% or less of my actual trading execution. I'm using the simplest technical analysis you've ever seen. Support and resistance, sometimes a trend line, maybe a Fibonacci retracement here and there. But technicals, in my opinion, need to be so stupidly simple. And then actual decision making, like why am I taking a trade, comes from fundamental analysis. It comes from NFP reports and what they mean for the market. And it comes from the Fed's likelihood that they're going to cut rates or not. And it comes from, the state of the consumer. Are people feeling strong? Are people feeling really broke, right? Those things are really important real world forces that drive the stock market, the futures market, the Forex market, all of it, right? Those are real world forces. That's what I actually trade. I do not trade. I think it's in my opinion, a very difficult way to approach the markets is just saying, I'm only going to trade based on candlestick patterns. It's unpopular because most of the retail trading world is all technical, right? But then most of the retail trading world is also losing a bunch of money. So when it comes to the markets, my opinion is probably 75% of the decision-making process is fundamentals. And the remaining 25% is technical analysis, proper risk management, trading psychology, all those sorts of good things that are also important. But fundamentals play a massive role in what I'm buying and why I'm buying it or selling it, right? It's very, very important stuff. So yeah. Anyways, guys, the Edge Finder, it is the tool that I use every day to help me spot fundamental trends. My company, A1 Trading, builds software tools for traders. If that is something that is interesting to you, if you would like to get a copy of the tools that I use, it is currently on Black Friday discount. We got 40% off going on right now. You can get access to the new stock box, get access to our signals room, get access to Chris Pulver's trade alerts, all of them. Everything is 40% off. If you'd like to get access to any of them, you can use the link here in the chat to speak directly to a member of our support team on our direct messaging live chat system. You're not talking to a bot. You're talking to a real person on our team who can help you out. Yes, exactly. We got it. Best recommendation together, fundamentals. Literally, that is why we're in business. Get the Edge Finder. It is actually true. I know, yes, it is a sales pitch. I'm not going to shy away from that, but that is why we built the tool. And it's a quite comprehensive tool. You can look through tons of macroeconomic data very quickly, all in one place. And it's not so difficult, right? That's the thing about fundamentals. The reason I think most people don't use fundamentals is because it's hard to properly look at them, right? It's very easy for anybody to pull up a technical chart, but using the Edge Finder, it's much easier. And again, I'm not going to disguise that as something that it's not. It is a sales pitch, but that's why we're in business. We build these tools to make that process easier for traders, and I genuinely use it every day myself to find the trades that I take. Okay, yeah, there we go. If you guys would like to get access to the Edge Finder, we'll leave the link in the chat. And we're going to take a quick break. We got Kenzo taking over the show here for a little bit. Kenzo is one of our top regular A1 Trading Show contributors. He also mixes a good mix of fundamentals and technicals in his trading. So check this out. We'll be right back after this quick break. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, and we're back with Kenzo. Hey, Kenzo, how's it going, man?
I'm doing great. Thanks, and you, man?
Doing well. It's good to have you back on the show. And thanks again yesterday for helping us to carry on the show for so long. We had a big stream yesterday. Almost went for a total of 7 hours, which is awesome. Kenzo,
that was great.
Yeah, I was going to ask you about the Fed meeting following shortly after you left. What were your thoughts? Did you have any opinions about what Jerome Powell had to say?
I think nothing much, but I think we're getting that confidence back. But I think at the moment, as we're already expecting them to cut the rates, that doesn't really create any panic or any agency in the market. That's why we just see the market where it is. But it's actually a good thing going further. So, but since we were expecting the rate cuts, I think we just have to continue seeing what is going to happen. But I think at the moment, any event that happened this week, I think it was actually overshadowed by election, especially Trump. I think that it's everything that we can focus on at the moment. Maybe after next week, it's where we're gonna check some other economic news. But this week, I think everyone was thinking about Trump, and likely enough, Trump seems to be welcomed by the markets. I think everyone is looking positive or thinking positive about Trump, and that I think is good. It's a good thing. But on other stocks, like not stocks, like let's say when we talk about gold, I think it is going to be the one which is going to struggle. I think all those push to the upside, I think slowly we will see them start to fall back because Trump is pro-business. So if businesses are going to go better or going to perform very good, I think everyone will be thinking about buying some stocks because you're going to make money there. So there is no time to panic, especially if he continues with whatever he promised. He said he wants to stop some wars and stuff. I think that was the only bigger factor that made gold to go higher. And yeah, I think that's what I actually saw on the news. And I think Powell continued to say we'll just focus on whatever the events are going to present. So which means they're going to be data dependent. especially when, yeah, I think at the moment there's nothing much. We're just going to depend on whatever that we're going to get. If they keep cutting, that will be good. But I think for now, everything is good because of Trump. I think going further, we'll be forgetting much, but we'll keep checking them.
Yeah, no, it's definitely a big, substantial move across the board this week, and I do wonder, and I've said this on the stream. I said a lot yesterday about Trump. It's people like him, people dislike him, but let's actually just hope for the good of humanity that there is some successes in the global sort of war situation stuff, right? With Putin and Russia and Ukraine and Israel and Iran and Lebanon and all these places. Let's just hope that, again, whether we put our like or dislike for the guy aside, and let's just hope that he is successful in that front, because again, the suffering is what 99% of people on planet Earth are wanting to end. So that being said, that does also play into the price of gold. I mean, if he is successful, and again, we hope that he is from a humanitarian standpoint, that could be a bearish catalyst for gold, as you've mentioned. A lot of what has caused gold to rocket higher has been the escalation that we've seen globally over the last, really the last few years. And it's not necessarily a dig at past or this current administration with the Biden situation, but it might just simply be that people are hopeful that there could be a correction to some of the recent stuff that's gone on. We'll see. I mean, again, gold being where it's at is also a response to not just the global war situation, which is a driving force, but also where inflation was and where it has now gone to. Right, we've seen inflation come down a long ways, which has been a good thing for many people who are really struggling. We've seen a lot of inflation progress in the last few years, and that is partially also why the gold market is up. Right, we can't simply say, oh, war is the only reason it's up, right? Well, also inflation has really had some really great progress after the last year or two, and interest rates are expected to come down. So that's been a very driving force to the upside for gold. So, war and, inflation cooling has been a positive thing. The question is, as you've just mentioned, the war side, one concern for many investors is also the inflation could tick up off of some of the tariffs that have been suggested. If that happens, that is also a bearish catalyst for gold, because again, stronger dollar, could mean interest rate cuts don't happen as much, and perhaps also that causes the price of gold to come down. Right, that's the other side. Right, the inflation concerns may also have some bearish pressure on gold.
No, you're right. You're right. Yes, you're right. I stopped sharing my screen. I think my network is very bad. Yeah, but
Okay.
on that, you're right. I hope maybe Trump staff, maybe they will advise him not to actually continue with those crazy tariffs, because yeah, I think it was good. It's going to be good for the dollar, but I don't think they will go as hard as he was saying. I think they will advise him. Yes, he has to add something, but I don't think there will be 100% tariffs or 60%. That was too much. But we will see. We will see along the way, because that it seems to be good, but not really good in a short period of time. But yeah, I think maybe if they advise him in a different way, maybe we might see some very lower tariffs, because it seems like now things might look good, but maybe we're going to have this issue of tariffs, especially with China, US, Europe tariffs and stuff like that. So I think that is going to be the problem for now. But what I like is, I think Trump is pro business, and I think I see most of the stocks performing very well.
Yeah, and I do think that in the short run, that is a pretty strong catalyst for stocks. I guess the other thing with gold here is, we've hit this level of support. We're seeing a little bit of a bounce, and we're retesting this trend line. I know you had the same one drawn. I saw it on your screen when it was visible. Very curious to see how gold specifically reacts to the retest here. Do we start to see yet another sort of lower low on this? lower high kind of concept. I really think I'm skeptical of getting too bearish too soon on gold, simply because it's been such a strong upward trend. There may still be some latecomers to the trend that could push it back up. But again, as we mentioned, we both seem kind of on the same page with inflation concerns, as well as hopefulness that, there is some push in towards peace in the world. Both of those things are bearish catalysts for gold. So I'm very cautious on that. Not to mention the US economy has held up better than expected the last few years, right? A lot of people thought that all the inflation was going to turn into a horrible recession. Have not seen that really materially happen. Jobs data has been a little bit better than expected. And I think when we turn back our attention, as you're discussing, towards stocks to indices, there paints a pretty good picture here. You've got, hopefulness for peace, but also, as you mentioned, the pro-business efforts, as well as less regulation, is a big one for a lot of these places, especially, some of the winners of this week. Frank from our team was pointing out to me that, financials were a huge winner because of the less regulations. That could mean more mergers and acquisitions. Maybe we see capital markets start to pick up again, which is a really powerful thing. Back in 2021, right, you saw huge pushes into IPOs, and that sort of business is very good for banks who facilitate those offerings. So, financials are up. You've got a lot of regulatory stuff that could be lifted or loosened, which there's just a lot of reasons, I think, to stay bullish until something changes in the story. And with indices, which one do you kind of lean towards? Are you higher convicted in the tech world? Are you more looking at the broad S&P 500, value stocks, Dow Jones, Russell? Where generally speaking, do you feel the most convicted within the indices options?
I think US 30 and NASDAQ, those are my primary pairs that I will be checking, especially when we have NVIDIA replacing Intel on the US 30 side. I think NVIDIA will be pushing US 30 aggressively to the upside, because most of the time we used to see US 30 going slower. And the whole year, actually, for this year, we saw NVIDIA pushing the whole of NASDAQ going higher. I think maybe it will help actually on the US 30 side also to push up. If maybe the earnings are going to go positive, going further to next year, I think US 30 might perform very well. US 30 might start to show us some very positive moves. But yeah, well, I will actually see what will happen. On the currency pairs at the moment, I'm still out. I'm actually playing around gold, US 30, and NASDAQ.
Yep. Yeah, no, I Dow Jones looking really strong. And as you mentioned, they did add NVIDIA to the Dow Jones here recently, which they knocked out Intel to put NVIDIA in. So Intel, the chip company that has been around for decades and decades. NVIDIA has also been around for decades and decades, but it's been the clear winner of the two in recent years. And you can see it in the stock price. Things gone absolutely parabolic. They added it to the Dow Jones, of course, for beginners new to the indices side of things. These indices are just baskets of stocks, essentially, right? The NASDAQ is comprised heavily of a diverse group of large companies, but a lot of them lean technology side. S&P 500 is very broad. It's, got all sorts of different sectors and industries, et cetera. And then the Dow Jones is, more centric on very strong value companies, which cool to see NVIDIA get added to that list. Very, very exciting times on that front. Question for you too, Kenzo. Do you have any thoughts on, you mentioned commodities. Do you have any thoughts on oil or copper or any of the other commodities outside of gold?
Yes, I was also interested on oil, but oil is been not moving that much. And if we can talk about Trump also, we know very well that Trump, that will actually create a lot of it will actually be available, which means oil might be starting to go a little bit lower, but we will see how that will turn out to be. once is in presidency. But I don't really see US oil going aggressively higher, as we will be expecting more of like pumping oil and stuff like that. So that will make oil prices to go a little bit lower, maybe between 70, 71, or maybe 60 something there. It's where we will be expecting the oil to play around. And which actually oil companies, they don't really like that, because they want to cut production so that they can actually increase the demand. But we will see how will that play out. But at the moment, it seems like oil is not really going anywhere. We can see that maybe it's true, we will start to see some serious sell-offs, or maybe let's say around the same level, where the market might just consolidate around the same level.
Yeah, that's interesting. And one thing to note too, about the oil side of things, it's not like we saw a ginormous drop in the price of oil off of the Trump kind of win. I mean, what's interesting to me about that is that it kind of shows that it's been sort of a bipartisan effort between both sides to really keep oil prices down to try and help with the inflation story. And I think that, whether we got Harris or Trump, that would have likely continued. Otherwise, if we saw the market think very strongly different, I would imagine we would have already seen oil make a much bigger, move down. So we'll see. I mean, oil prices staying low is very important to the inflation story. And so far, oil prices have been kept at bay in the low 70s. What would be disruptive to the inflation scenario would be if oil prices started getting back up into the 80s, into the mid to high 80s. That would really cause some issue, right? Because again, of course, all prices rise when energy prices rise, since every item in the world that gets bought and sold somewhere along the way has exposure to energy prices due to transportation costs and things like that. And those costs get passed on to consumers. So, we'll see. But we just did have some data points that came out. I missed them. They weren't, ginormous events, but we can just take a look at them. The consumer sentiment came in slightly better for the preliminary University of Michigan consumer sentiment. And University of Michigan inflation expectations came in at 2.6. Previously, they were 2.7. So some numbers there here for your morning.
Not bad.
And, not bad. Yeah.
Not bad. Very good numbers there.
What are your thoughts, Kenzo, on Bitcoin? Do you have any thoughts here? I have a long position on Bitcoin that I'm watching here. I've got my stop loss trailed on. Do you have any Bitcoin trades or thoughts on it?
Not yet. I'm actually interested into taking some trades, but since yesterday we were above that resistance, I think maybe from there it's where we're gonna start to see some bullish moves. But it's interesting that to see where it's going. And yeah, sometimes it's a bit confusing. When I check some cryptos, they like seriously flying. You can see 24% going higher, and some is just 1%. So unfortunately, I'm a bit confused which one should I check there. But as we know, Bitcoin is the one which is very good. But yeah, at the moment, I think we are going to go on the upside. Especially again, Trump, I heard he was talking about regulating some of the cryptos. I don't know if maybe that will be true, but I think if they continue that way, maybe we'll see it fly, because it means so many consumers are going to use that.
Yeah, that's again another interesting kind of movement here. Likely because just the softer regulation side, and as you mentioned, Trump has made some comments that have been positive towards crypto in recent, in some of his rallies and things like that. I know he did one in Nashville that was very pro Bitcoin. So I don't know. We'll see if that if that's true, if that persists, and what that could mean for the crypto world. Very interesting times, to say the least. Kenzo, I want to thank you for coming on the show here today and sharing some thoughts with us. I know we had some internet issues, but glad that you were able to come on and share some thoughts in this really crazy, chaotic week that we have had so far. Kenzo has his own YouTube channel for listeners who enjoyed his commentary. You guys I want to ask a favor. If you guys could go subscribe to Kenzo, it's at Extra Hot Forex on YouTube. We've got the link here dropped in the chat for you. You can keep an eye on everything he's got going on over there and plenty of free value in his YouTube channel. So, Kenzo, thank you very much for your time today and for coming on the show to share some ideas.
Thank you very much, man. So before I go, I don't know if maybe I can respond to some few comments that I saw while we were busy.
Of course.
I see. I don't know if I can comment to that because I think that sometimes they are discouraging and not. I think those people that don't really have enough information. Let me read that. I see someone said banks are not sitting watching candles. They know why or to buy or sell and stuff like that. So I don't know if you saw that. Maybe you will see that. So what I know, I think that is lack of information. Only 2023, if this person can go back and watch how many banks went bankrupt, maybe we'll understand that not only banks that can actually make money, even banks that can fail. Okay, someone said another one. I see another comment there. They say, if you're making serious money, why will you not like stop selling? The question is, we've been talking about Apple, Microsoft, Nvidia. Do these people know how much those companies worth? And if I still remember, they don't really offer anything for free.
Kenzo, you're out here with bangers today. These are killer points.
Yes, because if maybe Apple is a 3 trillion company, but they still sell earbuds. They sell so many stupid things that they don't even qualify to sell. You see, so now someone have to go back, go on YouTube, try to teach people for free, and still don't really have to gain anything. That's stupid. I don't think maybe anyone should come here and say, "Why are you doing this?" So now, where you buy things now, where you buy groceries, those people, they make money, they make profit. Do you go there and find some free grocery? No.
Yeah, no, it's exactly
Another
right.
thing,
And
if maybe these people follow, I know it's not everyone, but few. But if you follow, because I do follow some stuff, I also want to have hedge fund, like a bigger one. So what I've realized is 90% of the time, the stocks that they buy, they don't really perform very well. So they lose a lot. You see. So which means they can make money with only 10% of the stocks. So they lose billions. Last year alone, Facebook lost 20 billion within a day.
I remember that.
Yes. So when people start to talk about money, unfortunately, they expose themselves that they don't really know much about money. So yeah, I thought maybe I should actually mention that because to me, I feel like sometimes it discourages and it's a different side of other people. I understand that we can't think the same, but it's wrong. To me, I think it's wrong. You can't just go out there and say, why don't you offer things for free? Where they go to school, do they go for free? No.
Well, and do they work their jobs for free too, right? You know, do they go to work each day and work for free?
You see, so it's funny because you share your information. I'm here also trading, but I'm still inspired by you that, oh, this guy is always online. I have to make sure that I'm there, but there's someone who's sitting expecting to get free information.
Yeah.
And unfortunately, there is always free information out there. So by not distracting other people, why don't you just go straight to free information than to go online here and start to say 1, 2, 3. There is some information for free. Why don't you just go there and stop bothering other people? You see, I think that is simple stuff.
Yeah, no, you're dead on, Kenzo. I mean, that's the thing is many people, unfortunately, in the trading space, they have the issue with the idea of someone making money in the trading space that's not involved in specifically trading. When in the reality of things is, you know, there's not a rule in the world where it says you can't be a good trader and also sell something, because the reality of good trading is even good trading is slow and steady gains. It's not massive returns. So many very intelligent people who have proven their abilities can still sell something along the
Mm.
sides. I saw something that you might think is interesting too, Kenzo, and then we gotta run because we got our next show starting. Warren
Okay.
Buffett, right? Warren Buffett, huge investor, multi-bazillionaire, right? He's got more money than anything, and he
Mm.
still doesn't go do speeches for free. He still gets paid hundreds of thousands of dollars to go to events and speak. Does he need that money? No. But out of respect for Warren Buffett's time, which is worth immense amounts, they still pay him to come to events. You know, it probably won't even make a difference to his money, right? But it's not really about money. It's more about the respect for someone's time and value, and demanding that things be free is, yes, it's another pet peeve of mine as well.
Yes, so you're right 100% on that, because as like now they can search everywhere. Like you can go on Google and try to find those rich people and see if maybe they can do anything for free.
Right.
Most of them, they are
Right.
forced. They can't just go out for free, even if they're like seriously rich. So it's not really a good mindset, I think. And unfortunately, to me, it's like cyber. I don't know if maybe they call it cyber bullying or something, but there
Yeah.
is nothing for free, guys. If someone's trying to do something, it's the same as Apple trying to sell you something. It's the same as Bill Gates trying to sell you something.
Yep.
So now you can get to have this app, to have this laptop, you have to buy an app, but no one is
Yep.
going to complain. You
Yep.
see.
Exactly.
So
Well,
unfortunately,
Kenzo,
it's just
again,
like,
nothing but facts from you today, Kenzo. I appreciate it, both on the commentary on the market side, as well as just spreading some honest truth about the industry. Nobody is doing any of this stuff for free, and you know, at the end of the day, it
exactly.
shouldn't be free, but it doesn't mean that it's valueless, right? There's a lot of value in what is being shared if you're willing to work and learn from it. Kenzo, I want to again thank you. We dropped the link here to Kenzo's YouTube channel. You guys can find him there. There's some great content available there, and you can reach out to him if you have any interest in joining his services, which again are not free, but value is being added. Kenzo, thank you very much for coming on the show today, man.
Thank you very much, man, and also your viewers.
All right, see ya. Okay, guys, we got our next guest. Chris Pulver's taken over again. We was here yesterday, two different times. We did an all-day live stream yesterday, which was, whew, man, it was a long stream. But he's back. He's got some great value here for you. And we're going to be listening to what he has to say about this recent market move, all this chaos that we've been seeing this week. My goodness, it's been wild. So with that said, we'll take a quick break, and then Chris Pulver's taking over the show. Check this out.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax, it was a Pulver alert.
A pulver alert?
Yeah, you know, Chris Pulver. He teamed up with A1 Trading, and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but like, why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Hey everybody, happy Friday. Nice to be back. Hope everyone had a fantastic week. It's been a pretty good week. Watching some SPX action this morning. Things are relatively calm and quiet. Looking to see if we just stay somewhat choppy for the morning. Maybe we get a late push melt up. SPY at 600. I'm still watching closely. Let's see what we get. I have a long call on the SPY up to that 600 level. It's a 600 long call that I bought for 39-cent debit. Right now it's still trading for like 15, 19 cents I'm just going to let it run. I mean, I'll risk the full 39 cents. If we don't go directional today, I'll eat the loss. I'm trying to grab a couple bucks out of the SPX this morning if we stay choppy again. I do want to take a look. It's probably appropriate for me to comb through the portfolio this morning. I did have some downward moves on China. We got all red here. So HSI down 1%. BABA, big gap lower. Like, what the heck, bro? JD, NIO are falling. Why China stimulus disappointed, says Barron's. Well, that's not what I want to see. All right. So I do have some shares of BABA. I think I could probably roll some calls down. Maybe. So let me take a look. Also, I want to take a peek. I've got some 11.8 expirations. And let's see here. Mainly, don't go too directional on me, SPX. All right, I'll keep an eye on this one. Let's go to BABA. Have some small shares, credit spread. I might have. I'm not going to take assignment. If I get the 110 by 105, I'm not taking assignment on BABA. I'll just keep the small $1,000 allocation I put into it. I've got a bunch of ratio spreads for income that are way down there. Baidu, I do have some shares of Baidu. My cost basis is low 90s. We're sitting right at 89, 92 or so. I'm still going to hang on that one. Same thing on the credit spread. If I get a 110 by 105, that's next Friday. If it doesn't rip higher, I'm just going to take the small loss. I've got these 80s and 50s and lower levels that'll be income. I may end up rolling down I've got $400 and $900 on these covered calls. I will probably just take these off or roll them and see if I can just repair and go lower, taking more premium. So I want to consider doing that for the morning. What else? Oops, switch that back. There's Baidu. BITO bought some shares this week. IBIT bought some shares this week. Caterpillar, heyo, let's talk some Caterpillar. Got some profit on that this morning. That's a big fat dropperoo. CAT got filled at the 490 by 397.50. Let's see what this is trading for right now. We got a big gap fill. Simon says happy. Let's take a look. So Caterpillar got filled 400 by 397.50. It's out to next Friday, but bought this thing for what? 522 and 438. So 522 4.38. Nope. 522 438. That can't be right. That was a bear put spread. I'm only up 16 bucks. Wasn't this, I've got it on the, didn't I write it here on the screen? Got filled fudge. I got to find the price. Give me a second. It doesn't look like it's something I need to close up today. If it's not showing, 50 cents or $1 profit, I'm not going to close it. I think we took the trade for a very small debit. It was offering maybe 120, 130% return on risk. Let me go to my tracker here, go to CAT. 400 by 397 for $1 debit, and that got filled. So I got filled for 84 cents. What the heck, man? That is correct. Bought the put, sold the put, got filled for 84 cents. Okay. Yeah, that was easy. So I got filled at 84 cents. I'm gonna make sure these fills are consistent. Caterpillar, that got filled for $1. Mine got filled for 84 cents. Interesting. So I actually got a slightly different fill on some of these accounts. Let me check this. So 84 cent debit. So 84 cent debit. And then I've got $1 debit. Let's check this account here. 428.56. That's like a 60 cent debit. Okay, so I got some profit on that one. Interesting. So this one's up 40 bucks. This one is up 23 bucks. This one's up $50, $40, $30, $59. I think what I'll do on this one is I'll let this one marinate over the weekend. If we get a little bit lower in price or we come back in and try to fill this big earnings gap, then this should be looking pretty good for hopefully some more pressure to the downside. And this will be closing out for, I mean, it's a 250 max profit. So what I'm looking for right now, it's trading at about $1.55 from what I can see. So if I go to the debit spread, right now it's trading for $1. It literally was $1. All right, so never mind. It's trading for $1. I'm going to let it go. I'm going to let it marinate. If we get down to 395 or lower, that's fine. So, all right, I'll keep an eye on it. That's it. Never mind. All right, that's Caterpillar. What else? I just saw the price was looking better. CEF, that one's fine. That's all shares and aluminum. We got some CEF. That is that's a gold play, up about $1,000 on that one. CENX, that's aluminum. That's up a decent amount. These have to be like close to expiring. Chewy. So I'm up 18 grand on Chewy. I've got a covered call up to 37.50 out to January. I'm just going to keep an eye on that one. CLF, that's fine. Alcoa's been a sneaky little runner. Alcoa's up to 44. I put in some cover calls this week at 45. Ethereum, this one's up 6,500. Let me take a look at Ethereum. I tried to get filled in this one yesterday. I think it was during my final hour session. EETH. I've got a couple different credit spreads on this one. This is an ETF that trades with Ethereum. So if I go to EETH, I've got a 50 by 40. It's up $420 right now. Right now out to January, let me see how wide this bid ask is. So I pulled in on the trade about $5.50, and right now it's trading for $1.45. So I should, if I can close this thing out at $1.50, so I get in for $5.50, I close it out for $1.50, I get $4 total profit on this trade. If I can get filled here, I'm just going to go ahead and take the profit. But this is what happened yesterday. It doesn't have any liquidity apparently. Now, I mean, it's not a bad thing, because considering price is, 58, 55, and my strike price is $50. I mean, probability of getting assigned is about 24%. If I was going to take any assignment on that ETA or the ETF, I probably won't. But also, I'm just trying to see if price will continue to stay steady, possibly go higher, get this further out of the money, and then hopefully this will allow me to close it out where I want to. So I'll cancel that order, or just come back and maybe revisit on a Monday. Okay, so that's EETH. Ford, FXI, that's China stuff. I still got a credit spread in there. I'm up about $200, but again, it doesn't look like I can close it where I want to. So I got this for 27 cents credit. Right now it's trading for 22 cents. That would be $50 profit if I take the profit. Let me see if I can get out of here for 20 cents. 21 cents. 22 cents. Okay, the bid price just went from 22 to 26. I'm going to cancel it. I'll just sit on a little bit longer. This is out to the end of the year, so it's okay. GDRX, that's fine. GLD, I did a credit spread on that one this week. That's got a long time. IBIT, I bought some more shares. Coca-Cola, I have a bull put spread out to December. MARA, I have a bull call spread going out to January. Microsoft, bull call spread on that one. That one's fine. MicroStrategy, I put in a couple trades yesterday on MicroStrategy. Did everyone see this in my pulver alerts yesterday? I did a deep in the money MicroStrategy trade. I actually do like this trade quite a bit. MSTR. So I went deep in the money and I put on a 375 by 380. Okay. Actually, that's not right. I did a 375 by 390. So I'm giving myself $15 of potential profit, and I'm only paying $3.30 on the trade. So what that means is this is very similar to what I did on the Russell that I just took profit on. I paid $7.60 on the Russell, and I closed it out for $13, and price didn't even have to get to my strike price. We just had a nice move to the upside, and it paid. So I did this out quite a ways. Okay, but if price goes up in value and gets close to these strike prices, gets close to the 360, 375, 380. And again, why am I trading MicroStrategy? Because it's Bitcoin related. So if Bitcoin goes higher, MicroStrategy is probably going higher. So if I can take a 330 debit, turn it into a 660, $10 credit, I'll probably just take the profit, not wait all the way to expiration. But I do like that trade. Why you're not live on your channel? For some reason, the StreamYard didn't let me. We're having trouble streaming on YouTube. This may be an issue on YouTube's end. Yeah, it probably is. So edit, save changes, edit, save changes. It might just be like StreamYard's not letting me dual stream. It's okay. I'll be live today at 3 p.m. on my channel anyway, so we can recap. All right. So anyway, that's MicroStrategy. Let's go to Pfizer. All right. Pfizer, I've got to do some work on. So I have been consistently working this stupid stock down in price. My current break even on Pfizer is around $25.70, 60 cents. Let me check. So I have some shares. I'm doing a diagonal spread. I'm still working the cost basis lower. So right now my break even is $25.82. Okay. Now stock is trading at 26.97. Let's go to Pfizer. I'm going to end up rolling this for a couple of weeks. And look, I think that realistically, if Pfizer wants to drop back down to 25 and change, that's fine. I need to do my best to lower this cost basis and do it aggressively. If I still get it called away, I've got a profit target in mind. I've been trying to make about $20,000 on Pfizer, and I think right now I'm trading at like 16 or 17. So here's what I'm going to do. These $29 calls are basically worthless. It's trading for what looks to be 1 cent. So I can either roll it or let it expire, but I'm just going to place a trade and lose some of the time. Danny, yeah, those trades were great this week, right? We had 24. I mean, I hit trying to think 18 winners this week on waterfall. Yeah, that was good. So let me take this trade here and roll. So if I go out a week, 29 is just not giving me anything for it. So I'm going to go out a little bit further, 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 a little bit further. I might as well get out there towards the end of the year, December 27th. Keep this at 29. If I roll it down to 28, this is probably slightly better. So let me do the math on this. If I go out to December 27th and get 45 cents, that brings my cost basis from, let's see here, break even. I mean, my debit is literally costing me 83 cents. So I go from an 83 cent minus 45 cents, 38 cents my total debit on the trade. I just got knocked out of my FXI trade for 5 cents. So I made 50 bucks in FXI. That was a little winner. Okay, so if I knock it down to 38 cents, that gives me a break even of 25.38. Okay, if I get it called away at $28, that's 262 on 1,000 shares. I get 2620 times 8. I'll hit my $20,000 target. Okay. Now, I'm going to make a little bit less here, but if I work my cost basis down, this actually makes my trade almost free. So 27. So I've got 25. I got to just update this in my spreadsheet. This one, by the way, I'll show you some of the tracking that I do here. Everybody see this? Pfizer diagonal spread. I've been tracking this thing all year, and I just keep lowering my cost basis, lowering my cost basis. Right now, this total trade that started out over $4 debit, which is about $4,200 in risk, has been worked down to about $800 in risk. If I add another call to this, I'm working my cost basis down to like $30 and I guess like $300 in risk. So I go from a $4,200 risk to about $350 risk. That is the magic of options. So if that doesn't make sense to you, then get your hands on my practical options course, because I talk about this stuff, especially when it comes to diagonal spreads and calendar spreads. Okay, so let me do the math here. If I go from 0.83 minus, looks like I can get 86 cents, which makes this essentially free. Get it called away at 27. So that'd be 25 minus 0.03. Get it called away at 27 times. I make 2,000 bucks. So I'm making a little bit less if I get it called away at 27, but I am working my cost basis down lower. So what do I want to do? Do I want to make this essentially free? Probably should. Probably should. And then if we obviously get a bump to the upside to get it called away at 27, I mean, I have had 1, 2, 3, 4, 5, 6, 7, 8. So this entire year I've taken Pfizer, I've traded this 8 times and I haven't had it called away once. So I think finally, and this of course is how the market's going to work, right? By the time I get aggressive and roll my strike down close to price, this is when it's finally going to move up and I'll get it called away. But that's okay. I can still make about $2,000 on the trade. So I'm going to roll this to December 27th, down from 29 to 27. I'll still make about $2,000 per account and walk away with a couple of bucks on the trade. And that's fine. And that way, by the time it expires in January, I'm not taking the assignment for 1,000 shares. I have way less capital tied up, and I can just get it called away with that sell call. So anyway, I'm going to do that trade so I can get what looks to be close out one, get another. Let me see if I can get 95 cents. That actually increase my cost base a little bit, or decrease my cost base even more. Let's see if I can get filled in this one. 95 not filling, 94. I'll try to massage this down. Hopefully I get 90 cents for this, maybe 90 cents. Get filled at 90 cents. Okay, that's cool. So that's out to December 27th. Okay, next account, take my 29, do a quick roll. Roll this out to the 27th of, and roll this down to 27. Now this one shows $1. All right, 95 cents maybe. All right, let me try to get filled at 90 and just make it consistent. So 90 cents, getting filled at 90 cents, no problem. All right, same thing here. 29, quick roll. Go out to December 27th. Roll this down to 27, grab my 90 cents. Got filled at 91. Okay, just give me about 90 seconds to do this. Quick roll. December 27th down to the $27 strike. Grab. Come on, give me a few more pennies for this, would you? All right, let's try. Oh, don't fudge me over now. All right, so getting filled at 90 to 91 cents. That's good. Okay, a couple more accounts here. This one, quick roll. Roll this out to the end of December. Roll this down to 27. Get my 90 cents. Don't be stingy. There we go. And 2 more accounts. Quick roll. Out to December 27th, down to 27, 90 cents. Perfect. And last one. Quick roll. Out to the 27th, down to 27, 90 cents. Filled. Okay. So now I'm going to update my spreadsheet. Just a little, give you a little insight here what the crazy math has to do. So there's my current trade. Okay. Rolled out to 12/27 expiration, $27 sell call for 90 to 91 cents credit. I'm just going to take the lesser of the two. New break even. So I have a 83-cent debit minus the 91 cents or 90 cents that I collected. I'm actually 7 cents in profit with my current strike. So my new break even is 24.93 on a $25 long call. If called away, keep $2.07 per share. Okay, so 207 times my 10 contracts, I'd make 2070 on 8 accounts. So I'd make 16,560. I'm sacrificing a little bit, but I'm also playing with time here where once we get into January, if I'm not above 27 by December 27th, then I'm have to consider taking the shares, owning 1,000 shares, which if I own 1,000 shares, I mean, it's not the end of the world. I put aside $24,000. I have plenty of capital to do that. But obviously for some of these IRA accounts with 42 and 43 and $40,000, I don't really want to allocate 50% of that capital to frickin' Pfizer. Not that I worry about it. It's a super low volatility, low beta stock. But point is, I don't want to have to do that if I don't have to. So I'm just going to try to get the darn thing covered away. Okay. All right. So that's Pfizer. Let me work through a couple more positions here, and I'll take some requests on charts. I see DXY is popping up here. Yes, that's good. Okay. So Pfizer, good. Keep working through the alphabetical list here. PHYS is gold. Palantir is up. Oh my gosh, dude, that thing is just bananas. I'm up $2,300 on Palantir and haven't owned a single freaking share. Next week I've got expiration 36 by 35. That's going to be full profit. I'll let that expire. PayPal 85 by 87.50 call spread. Qs took a bunch of profit this week. Have some more in here. These are actually looking pretty darn good for some profit. Surprised they're not getting filled, actually. I see one here for 73 to 74 cents. These have to be getting close to getting filled. Okay, those are the debit spreads that are close to getting filled. QQQE is up a little bit. RCL, that's a bear put spread that's getting beat up. Like, this stock ran like crazy, so I'm taking some small losses on that one. That's equal weighted S&P. That's a dividend stock. That's a growth stock. SkyWest, I put a ratio spread on SkyWest yesterday. SLV doing some credit spreads. What else? Anything else? OXY. OXY at 50.42. I'm going to try to roll these real quick. I'm going to do the same type of thing I did on Pfizer. My roll. Let me calculate my break even real quick. By the way, like, I mean, I guess I care, but I'm like, some of you are like, just analyze some stocks. I'm like, yeah, well, I've got a whole portfolio to look after here. So I would appreciate if you let me kind of blend my live trading with taking some requests and doing some analysis. Okay. So I'm going to try to whip through a couple of these rolls. And so I need to take this OXY $53, which expires today. It's pretty much worthless, but I'm going to roll it, try to get some more time into next week. And I want to calculate my break even. This one to me is just a repair. I'm using it as an income trade. So if I go to, this one's now 12/27, expiration $27, sell call, and I'm making 2.07 if called away. Okay, so I'm just working the cost basis much closer to current price. If it goes down lower, then I'm okay. I'm still in profit. I can still make $500 or $600 down here at these lows. But here's what I'll probably do on Pfizer. If we get down to these lows, I'm probably adding more positions. Not necessarily more shares, but I'll just do bull call spreads, bull put spreads, establish a line in the sand, and I'll still look to make a couple bucks there. All right, OXY is 50.42. My break even shows 51.99. Let me confirm that on my spreadsheet. Okay, OXY, I own it at 51.99. Okay, so I'm going to do a quick roll and try to be aggressive on this one. So if I roll this, I could roll this out a week and keep the same strike, grab 27 cents. I think I'm going to go out towards the end of the month and roll this down to 51. So I have a break even at 51.99. I don't think I like this one as much, so I own it at 51.99. Get it to $1.26 on the credit. I get it called away at 51. That's not going to do it. So 51, I make 27 cents on 500 shares. I'll make 135 bucks. I'm going to be looking after a little bit more profit than that. I'll go 52. So 51.99 minus 88 cents. Get it called away at 52. That's a little bit more reasonable. Okay, I think I'll do that. So that's going out to the end of November. And that trade work out just fine. So I think I'll do this. I'll roll it down to 52. If I just want to repair the darn thing, let me see what that looks like. So I own the shares, 51.99. Lower it down to $1.78. Nope, I got to keep it at 51 or 52 if I want to make profit on this one. So I like the 52. That'll give me about $400 $400 per account. So maybe $3,000 or $4,000 total. But I'm going to do a quick roll. If I get 90 cents on it, that's okay. So I'll try to roll this for 90 cents if possible. 90 again, 91 cents will be fine. See if this will work. So 90 cents, survey says. Same thing as Pfizer, surprisingly. Replace 89. All right, fill to 89. So this account, same thing here. Quick roll. Go out to the end of this month and roll it down to 52. I got filled for 89 cents. No problem. This account, same thing. Quick roll. Out to the 29th. Down to 52. 90 cents. 89 cents. Got filled. Okay, this one just has partial shares. This one is going to be another one to roll. 53, roll out to the 29th, down to 52, 89 cents. Filled, I think that's the last one. So no positions there other than fractional, no positions other than fractional. Okay, so that takes care of it. Now I just need to update my spreadsheet and then we'll take some requests. I do have to go here in about 15 minutes. So I want to take, I want to at least take the last 15 minutes and do some requests. So rolled to 11/29 expiration, $52 sell call for 89 cents credit. So the break even goes from 51.99, 51.99 minus the 89 cents, so it's 51.10, which would be 90 cents per share profit. Okay, so if I get it called away at 52, I make 90 cents, 500 shares, I make $450 times 3 accounts. I'll make $13.50 to repair it. I'm not looking to hold on to the stock very long. That's it. Okay, so OXY is good. The only other one I did on Pfizer, the only other one would be JD. And if I can take another just couple of minutes on JD, I'll do the same thing. So here's what my position is on JD. JD, I have 3 accounts with 500 shares. The current price is $38.81. My cost basis, is 26.38. Nope, that's not right. I got it called away earlier. Hang on. Calendar spread, adding sell puts, 23.44. Nope. Where the heck are you? There it is. Okay, $40 per share. That's my break even. So now, covered at 42. It's worthless, so I can let it expire, but I'm just going to roll it. My break even is $40. So now let's see what I can do on this position. So if I look at a roll, I'm out to the 15th. Let's go out to the end of the month. If I roll this down to 40, I get $1.71. So $40 minus $1.71 gets called away at $40 times 500 shares. I make $8.55. I'm good with that. If I roll it down to 39, I'm going to make less money if I roll it down. I just get the cost basis even lower. So 40 minus 2.13, get it called away at 39, make $1.13, make $5.65. Do that one more time. 40 minus $1.65, get it called away at 40 times 500, $8.25. All right, I like that one more. So I'm going to roll it out to the end of the month. I'm going to roll it down to 40. Work my cost basis down by about $1.70 or so, and calculate the numbers. That should give me about $800 of profit if I get it called away at 40. So I'll work on that right here. Just 3 little trades. Filled at $1.70. Okay, this one just has naked trades. This one has some shares. Getting this called. Let me do a quick roll. Out to the 29th, down to 40. $1.72 perhaps. Got filled at $1.72. Very nice. This one has 0 exposure on JD. That's good. This one has shares and cover. So cover, roll out to the 29th. down to 40. $1.73. Can I grab that? $1.73. Okay, that should be it. So my own share should be three accounts. 1, 2, 3. And I rolled these down to $40 on 3 accounts, so I'm good and all situated. Now I just have to do the quick math. All right, we are going to hammer through some requests here the last 12 minutes, just so you know. Rolled to 11:29 expiration, $40. Sell call for $1.72. Credit. So the new break even, I'll take the high at 40.02 minus the $1.72, 38.30. So break even 38.30, $1.70 per share if called away. And that is it. So if it's called away at 40, I make that times 500 shares. I make $850 on 3 accounts. I make $2,500 or $2,550 in profit. Cool. All right. So JD, Pfizer, OXY, done, happy, repaired, right? Now let's power through some requests. What do you got? I saw DXY pop up first. Currency strength chart overnight. I saw something like there's another intervention level in the Japanese yen, but that doesn't look like it's huge outlier. I just saw there was some manipulation going on. Aussie weaker, New Zealand weaker. Yesterday was the opposite. We had Aussie, New Zealand strength. We had JPY a little bit stronger. Dollar was kicked in the teeth yesterday, but here we are back up with JPY, dollar, and Swiss on top. Aussie is the weakest. I think a lot of that is China related too. You know, China weak, Aussie weak. That's probably going to be a pretty solid correlation moving forward. I don't know why the market keeps saying like we're so disappointed in China stimulus. It's like, okay, I mean, because they're not doing what a stimulus bazooka like the U.S. is doing. Like they're not adding $1 trillion of debt every freaking 35 days. I'm not saying. I mean, I'm just saying it's like I think it's funny like the market expectations of like China's not lifting animal spirits anymore. They only did it. So anyway, I think the Aussie, if China doesn't start to pick back up, which I do think they're intentionally trying to put in a floor, but I'm not trading these things long term. Like China stuff for me is if I can turn these trades into profits, I'm taking profit. You know, Alibaba and Baidu, I'll work those down. Those are like good stocks that have been pretty big liquid wise. There's a good market cap to them. They have been doing really well with Western money, so I don't think they're going anywhere. But there's obviously some risk that I need to make sure I'm aware of. Okay, all right, DXY. Guess what? We're sitting right in the middle. So we had big noise on the election, big fallout right back to the middle. We're sitting right in the middle. Think of this like a tuning fork. There's a high, there's a low. We're sitting right in the middle. I wouldn't wait for anything until this thing actually breaks higher or breaks lower. I would not touch this dollar unless it goes nowhere. Or I'm sorry, I wouldn't touch the dollar unless it goes somewhere. Meaning, do we break out of this kind of, consider this like a master candle. We have this election candle. Okay. If we go from this low to high and we actually break higher, there's my profit target. We break lower, then we can go all the way back down to lows. And actually, an easy way to do this would be measure your move and go after a 50% breakout target. That's a very structural way to do that in a currency pair. Is go 50%, 100%. If you get to 50, move your stop to break even, get to 100%, take your profit. Make sense? So food for thought. Okay. Other charts. We got just a few minutes left. I'm going like right at the top of the hour. Okay. Let me do a quick spot check on the old SPX, which I'm in right now. If you want to type in a couple requests, have at it. So my $2 is trading for $2.50. SPX, don't be a freaking turd. SPY right now is up to $597.90. Am I getting anything on that $600 call? Probably not, but I'll find out. It is still the same 17 cents. You got to be kidding me, bro. SPY 600 at 0 DTE. You suck. Part of me wonders on my SPX trade if I don't even bother with a stop loss, if I could turn this thing into profit. That's stupid to do, but I'm just curious. Let me check something really quickly. So SPX, $2, $1.65. Where are my levels at? Current trade right here. Flip this around. Now that's a 22 delta on the call side. That can definitely get tested if we have just a big late day squeeze up through 6,000, but I'll keep an eye on this one. If it's slow, it'll be fine. There should be time working in my favor. What else? JPY strong all day. Is it today? Yeah, strong all day. I mean, that's not crazy strong. This isn't like, intervention strong, I don't think. It's strong. It's up. But as I've said a lot, I don't love the Japanese yen, and I'll probably continue to say that until people get sick of me saying it, which will be never. So, all right, couple more. Let's check some oil, gold, silver. We did the dollar. Let's go oil, 70.24. Again, watch that floor on oil. I think that floor is vulnerable below 66. If it breaks, we probably drop to 55 or 50 real fast. No trades on oil for me right now. Natural gas is pausing. I'm hoping we go sideways or lower. I'd like to buy some dips. Gold, I did put on some credit spreads this week. I don't think gold is done pulling back, by the way. So if we go high to low, lower high to lower low, if we just have a bit of a correction here, look, all I'm going to do, and you'll see it in the pulver alerts, I'm going to put on some spreads in here, and I'm going out to 2026. I'm not even going to care about the time factor here outside of, do I think gold's going to be higher in a year? Yes, I do. So I'm going to trade it that way. And if this is 1%, and this is 1%, and this is 1%, and this is 1%, basically that's going to be 1, 2, 3, 4% profit on the year with doing nothing other than sitting and holding with a fraction of my risk. So I'm good with that. And obviously I can add a little bit more. Then I can start getting more bullish if I see there's better confirmation. But that's what I'm doing on gold. Silver, similar. We just don't have as much of a room to drop, I would say. Silver's probably pretty well supported in here. So maybe one more credit spread on silver. Same idea, though. If we catch some support, my target's here. My second target is way up here towards like $44. But I like long gold and silver both. Okay. Bitcoin, big move on the election. We're up to some fresh all-time highs. I bought some IBIT this week. I'm willing to dollar cost average on pullbacks. Otherwise, measuring this out to 107, looking at IBIT to go to the same area up to 57 and change. That's, again, roughly, if it's perfectly correlated, roughly where IBIT should go if Bitcoin hits 100K. Okay, MicroStrategy, lots of pullbacks. I did that deep in the money bull call spread. I got lots of ratio spreads down here. I'm still willing to do some credit spreads and debit spreads back down to the 220 to 200 handle, but I'm going to hold off for right now. Ethereum, looking good, looking better. Trying to get this EETH close out for profit for above $60. That should be easier. I've got about a 550 credit that I'm trying to close out for $1.50 or less. Copper is all over the place. That's really choppy. I'd stay out of that right now. Japanese yen. I'll be interested in Japanese yen futures if we're back down towards this crazy bottom. I'll look to be long Japanese yen futures with defined risk. Nothing silly. Probably a lot easier to trade futures market like that with defined risk because I could trade options versus doing what I typically do in currencies, which is get my butt kicked by the Japanese yen because I hate it. So I'd rather just trade futures with defined risk. All right, Nikkei has done nothing. DAX is still choppy right now. FTSE pulled back and is still pulling back, potentially vulnerable. If we don't have a snapback on the FTSE here with this trend line support, I do like that level. But if we end up breaking this low, we could, probably a range trade. I don't think we're necessarily breaking and going like crazy low. It's like just look for this to either bounce off trend line support or find this August low and then come back into a range. And I think the FTSE will be okay. So there's some long opportunities there with some good support, tight stop losses. HSI, China's down. I'm noticing that. Apple pulling back a little bit. What did I do here? Oh, I bought some shares. I bought some shares of Apple. I also have it covered at 200. This is out to December. So I've got a break even here at 223.35, seeing if I get it called away with a push towards these highs. Amazon, I rolled a call out further towards the end of December. I rolled it at 210. I've got it at 210. I just rolled it out in time for another couple of bucks. Google's looking fine or above our bull call levels. That's good. Meta. Actually, you know what? One thing I wanted to look at. I would love a little pullback action on Netflix. I don't know about anybody here, but I got all excited. I was watching last night. I had about a 45-minute road trip home, and I watched the Jake Paul, Mike Tyson countdown on Netflix, and I was like, man, I'm excited to watch this fight. And I hope Mike Tyson beats the crap out of that kid. nothing against Jake Paul. I mean, seriously, I give the kid all the credit in the world for promotion, but I'm like, I'm still scared of Mike Tyson. I don't know how you can't be. If you watch any old highlights and watch that guy still train, I'm like, I do not want to take a hit from a dude that used to be like the greatest boxer. But who knows? Anything can happen. But it's going to be interesting. I'm interested in watching it. So anyway, I think Tyson wins. I'm curious what the line is actually. We saw the betting markets, right? We saw like Polymarket, Kalshi Market call the election way more accurately than the polls. So I'm wondering what the line is on a Tyson fight. Like you put $100 on Tyson, does it pay you like $10 because the odds are so much in his favor, or what does it pay? I don't know. So I'm just curious. But like I said, it's next week, next Friday. There's like 5 or 6 fights to go with it. I'm sure the fight's going to be like at 11 p.m. or midnight or something like that. But that'll be the benefit of being out in Utah, is I can save a couple hours and won't be super late. All right. Anyway, I'm going to go here in just a minute. Real quick before I go, I know we've been posting stuff all week about Black Friday sales. Get your hands on a Black Friday sale, because when the price goes up, you're like, why didn't I buy that? Why didn't I get the Pulver Alerts? Why didn't I get the A1 Edge Fighter? Why didn't I get the stock box? So grab your 40% off sale. Get the bundle. I'm throwing in a $500 course to go with that. So if you get my Pulver Alerts to go with it, I'm throwing in my Practical Options course. It's all accessible in the Discord channel. There's a full 4.5 hour video. You can break it up in sections, but my full Practical Options course, and I've got the strategy guide to go with it. So that is just to help you get up to speed with 13 of my favorite strategies that I trade in options, give you all the terminology, all the key terms, looking at risk graphs, understanding risk reward. And there's trades that I can do short-term, medium-term, long-term, and I can do up, down, sideways. So if that's like crash course education on options, I think it's totally worth it. And I'm throwing that in for anybody that gets the Pulver Alerts in a bundle with A1 trading. Okay, so that being said, happy Friday. Have a good weekend. I'll be back on my YouTube channel this afternoon around 3 p.m. for a final hour session. And hopefully I'll get the stream situation. It'll be fine on my end, so restream should be fine. But StreamYard, I'll see if that fixes next week. But have a great Friday, everybody. I'll see y'all soon. Thanks, team. Bye.
Attention! The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, Pulver Alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.